All right, ladies and gentlemen, I got your watch list coming in November 19th, and well, this stock we got paid to trade. I'm going to cover the infamous ghetto spread, but we got literally paid to take a $500 trade on Roku, meaning it cost us nothing. We literally collected actually over 10% of the initial amount, and the max we could make is 500. So I want to go over this one, show you another play, and get this out of the way because especially in this marketplace, this is important. I have a potential play for tomorrow. It was a trade that I missed today, actually two, so I'm going to be looking at them. You guys, lucky for you, I noted down the prices, and now I'm doing my price analysis so you guys can follow along. And then we got some of the basic keys that we need to cover. The market went up today, surprisingly. Well, pretty much closed. You can see the S&P came down after hours here slightly, but for the most part, the market was almost unchanged, despite this big drop in the morning, which was related to the trade news stuff. But for the most part, we're still holding up pretty good and at all-time highs. So there's that, but I'll cover the keys. Well, maybe I'll cover them really, really briefly. The biggest and main keys. Oh, I got to show you that later. See, because lucky for you guys, we have a ghetto spread done on the Robinhood account, the real estate Robinhood account. We clapped the other one, so slow your roll. Don't worry. And then we have it on the Tastyworks too. But the keys are to be continued, my friends. And what does that mean? The continuation plays are in full effect. We've seen a lot of them this morning. That's some of the ones we missed. That's one of the ones I'm focusing on. But I'm excited for the opportunity this is creating. And there's a lot of companies left and right from different levels of when they reported and how they're continuing. So watch out for that. And as far as news, I'm going to be looking for trade news as well as political news, stuff along the lines of this impeachment and how that's been going in effect on markets, all that. But I'm looking for that at the same time. And if that happens, it's going to kind of point towards stuff later. But we only have like 40-something real days in the year, which is a lot less trading days. So keep your guys' eyes on this stuff. So that's the main thing to watch for tomorrow as far as, broader news. And I'm keeping it very simple because we have to see what and how the market reacts. But the main thing, get paid to trade. The ghetto spreads, baby. But before we do that, I cannot forget, make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. And if you don't know, we did this trade live. We did the Disney trade live. That was a big 2,000% play. Not anymore, but I'm going to show you guys that because that's one of the ghetto spreads we did. But we did all of that live. We're live 30 minutes before open. It's the first link in the description. It's pinned in the comments. We better see you there. All we ask is your positive, respectful, contribute, post, play. That's also my favorite news scanner, youtube.com/thestockmarket/live. You go there Monday through Friday, 30 minutes before open. They have all the news. It's just all there, right there, free news. It's amazing. Oh, man, I love you, Chad. Chad's a really good guy. Great friend of mine. I'll introduce you if you come. But also, don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. Let us know what you're playing. Here's a way to start sourcing information right here, right now. So post what you're looking at. But let's get right into it. The ghetto spread. This is what you do. And I'm going to show you guys the play and what we did it on. We did it on Roku. And like I said, we pretty much got paid to make $500. Best case scenario. Worst case scenario, we get paid literally $4. Hey, it's a free $4. You can't complain. But there's no real name for this. A lot of people were hung up on this today. It's just like the Head and Shoulders or something like that. You guys hear that and you don't question it. You don't think twice about that name. But you say ghetto spread. Everybody wants, what's the real name? It can't be called the ghetto spread? I see how it is. But essentially what we're doing is buying an option. It goes in I had a spell check. It gains in value, and then you sell an option at a further strike price that pays more than the original amount. So this is what we did here on Roku. And now this is the real estate account. They asked me about a Roku play today, and they were going to play one for way, way more money. And I told them no, and I wanted to show them this. That's why I executed it for them here. And that's why we put that out. We put this one on the stream alerts as well. This was a trade that I made. I stood by it. I even told them you could chalk this up to me. And I was going to go back and I'll even show you guys their biggest loss. Like, they've actually been doing very, very well. But the problem is they've been making big trades. They try to buy big contracts here, and this is what I was trying to prevent them from on a stock like Roku. But they're just taking a loss on these shares that they bought. They bought 1,200 shares of here. That's literally a majority of their account. You see they lost $5,700 on this. But what I'm doing for them is selling premium on these shares so that they can lower their cost basis. And we actually made them $1,500 last month by selling some of the calls, so utilizing premium. But here's the play, and you could see we did this separately, so I'm going to show you on Robinhood, but this is the first call we bought, the 195. So this is buying an option. This is making the original play. We bought this 195. Again, if you were on stream or if you had the stream alerts, you saw it there, 195 a weekly. And this was, I even said it even on the stream alerts. I said this on stream. This was a very bad play. This was a way to get your hand in the cookie jar on Roku because this was very far out the money. Roku was trading at like 150 something. Oh man, see, they're getting killed after hours. I don't know what the hell that was, but even then in the morning when we got it, I think they were around like 160, but a 195, that's almost like 20% away. That's a big move away, but it was still pretty expensive because it's Roku, and if Roku goes in this higher range and breaks out like it did, it could go pretty good. It could go up a lot, or you could even flip this for extrinsic, and you could see this is what happened with the contract. We bought it for 30. As Roku started going up, the contract climbed to about $60. It went up 100%. This is what's happening. The option gained in value. Then we sell an option at a further strike that pays for more than the original. So again, this is a 195 call. We bought it for 30, but when it went up to 60, when the option went up around 12.25, what did we do now? We sold another option at a further strike price, one that should be lower valued essentially. And in this case, it's a call, so it's further out the money by $5, but I sold that. I shorted the contract. So we sold a contract we didn't own, and I'll show you guys how to do that here on Robinhood. But you sell the contract, and we collected $34 for this contract, which is a 200. So we spent $30 for the 195, and then the stock price went up in value, and this even went to 43. I could have got an extra $10 if I sold it at a different time. You could walk away with more. But then when our contract went up in value, I chose to short this contract, and I collected $34. So if I paid $30, I got $34 back for this one. I'm walking away with $4. So now if I'm going to make 100% on this trade, that means I would lose on the 195. So if I'm going to win on this trade, I would lose on the 195. But if I lose on the 195, I lose $30. But in this case, I collected $34, so I make $4. That's the worst case scenario. But now this is the best part because I got paid to make the trade. So I'm going to always walk away with $4 more than I came with. But now since I own the 195 call, if Roku did indeed go up to 195, or even if Roku went up to 200, I would make $500 between this. This is essentially a spread now. But I would get the right to the stock at 195. So if it went up to 200, I would lose on this trade, but then I would make 500 here, and then anything above 200 cancels out. So pretty much I cap my gain on this contract, because if I didn't sell this contract, the gain would be theoretically unlimited. But the reason why I did it on this play right here, and why we chose to do the ghetto spread today, because this is what I even said was good. The stock didn't have to go up 1,000%. Roku did not have to go crazy. But without it going crazy, the contract still went up in value. This contract was already a low probability, so the fact that I could have capped my gain on an already improbable play, that's fine. And even then, the best part is, even by capping the gain, this is still a $5 difference. You're telling me now I'm taking zero risk, getting paid $4 over 10% of the initial investment at 30. And if it actually ends up shooting up, I'll make $500. So if it does go to like 200, 210, I could have made maybe 1,000 or 1,500, but that's still unlikely. But even then, I'm cool with capping my gain and only walking away with 500. And that's exactly what happened here. By shorting this contract, you cap your gain, but we collected more money than what we paid. That is the ghetto spread. And essentially now you're getting a credit for the play, meaning you spend nothing. Instead of debiting, you get credited, but it's structured like a debit spread. So again, check out the videos we have on spreads, but now this is how you do it on Robinhood, and this is how it looks. You go to any of the options. So let's say you bought the Roku 195 call. You figured out how to go to the option chain on Robinhood, I'm assuming. Then you own the option. So next, say you want to do the ghetto spread, you come to the option, then click view all options. Here's the expiration, November 22nd. Scroll up to the option chain. You're going to see on the option chain +1. So then you see here right above it, -1. That's how it should look. This is a normal debit spread where you buy a contract and then short the other contract. But the difference was we got paid more to short this contract than we paid to buy this one, which it should be the other way around. But again, once you're on the option chain here on Robinhood, you own the contract. And now when you want to do the ghetto spread and short the contract, you go to sell, then you scroll up to the contract, and then you would come here and click this contract. It'll say short call. Set your price, how many contracts, and then the limit price usually on the lower end is where you want to sell it because you're selling it, not buying. So if you want to get filled instantly, go with the lowest price here, and then review order, and boom. if you own this contract, it will let you sell this contract and short this one, and it won't take any buying power because essentially you don't need buying power because this contract covers this contract. And then boom, once you put that order, you'll see it in Robinhood and it will show up as two separate options. And there you go. You could see what's happening with this play. Here's the 195 call. We bought it for 30. It's now worth 25. I'm down $5, but then I sold this for 30 and that one dropped, but now I'm up 19. So overall, we're still up 14 bucks or 50% of that $30 in the beginning. But again, we have no risk. But that is the ghetto spread. And if you think about it, we got paid to take this weekly gamble on Roku. And that's why I love it. And I think if some of these opportunities, you guys could be smart, get your hand in the cookie jar, even on some riskier plays, but limit your risk. However, if you chase these, you got to be careful because this only works if you're able to buy a contract at a lower strike for cheap, and then it has to go up in value enough where you could sell the lower contract for more money. But again, what made Roku ideal, it's very volatile, but the difference between these strikes is $5. So if you do that and the difference is 50 cents, you may only cap your gain, and you could cap your gain too small where it really wouldn't be the best of the trade if you were right. So keep that in mind. But now, as you see here, even though we're only losing $5 here and we're up 19, the best part about this strategy is you could win on both. And now let's go to the Disney. We did the same play on Disney, if you guys recall. This was from last week. You see, I'm still up 1,000% on this contract. It was up 2,000, but I owned the 146 call. I bought it for $25. And then what happened, the stock started shooting up last week, and we sold the 155 for $144. So as you see here, worst case scenario, if I'm going to win all of this trade, this one will probably lose. But even if I lose on all of this one, I'll walk away with the 144. So I'll make 119 no matter what. But as you see here, I'm up 358 total because this is a 146 contract. Here's Disney. Disney's trading at 147.59. That's like $1.50 in the money. And it has some extrinsic value, so it's going for $239 or $220 or so. So I'm up $239 on that, but then I sold this when it had a lot of premium, but now it's further from $155. I'm up $120 on this play. So again, on this play, I'm always going to walk away with $119, even if both of these expire worthless. But since I sold this at a higher price and this one's still in the money, I'm making money on both of these now. So that's why come Friday, if Disney closes at like 146, or let's say Disney even closes at 150, I'll make $400 from this contract, and then I'll also keep the 144 because if the stock closes at 150, this would be $4 in the money, but these would expire out of the money, and I would keep the whole premium. So there you guys go. That's two ghetto spreads, but you're seeing, in this case, I'm getting paid to take a $900 risk because that's my max gain on that one. So that's why I'm able to hold through Disney, the ups and downs. Either way, I'm walking away a winner, but that is the ghetto spread. We've talked about this a few times. Hopefully that clears things up, but keep your guys' eyes out for it. But let us get into the plays. Now that we got that out of the way, hopefully you can put this into practice. When you see some of these, I have two different potential plays. I want to watch Disney, obviously, tomorrow, and Roku, but the next thing I want to look out for is a Wally World. This is the one I put out yesterday that I said to watch, but now I have a play with it because this was the play I wanted in the morning, but I missed it. But this is what I'm telling for you guys. I could watch this now. It was this week's 123. You could also go for next week. And again, I'm not in this play. This is one I watched. I missed it. I'm going to be looking at this tomorrow, but it's up a lot. And Walmart did start some of that continuation, so be careful. And two, also, option trading, trading, candles off almost financial advisor. Please consult with financial advisor. This is educational purposes only. But this was at 16. It shot up to like 38 or 40, so it had a pretty good run up there, but now it came back down, and that's good to see with the prices. But I'm going to be looking at this, the 123 for this week or next week. I want to see how the prices fluctuate, and I'm going to keep my eye on that. So that's my first potential play. The next one I'm also going to be looking at, and this was another one I missed. I was really pissed on this one because this one rallied in the morning. The UNH 282. It did end up coming back this morning. It was at 30 cents. I saw it. There was even trades that went through. It like happened so surreally fast, but it went from 30 cents to $3. So UNH is a powerhouse when it comes to some of these moves, especially because UNH is a very low volatility stock, so it has to just hit it. And you can see it just went vertical there in the morning, but it could go crazy. And when it has momentum, the contracts go up. But that's why you see this contract came back down, because it instantly becomes cheap again. So this is $10 out of the money for $50. If you could get like $6 for $50, that'll probably be a little bit better. That's usually the normal velocity on this. So that's why, again, this was $30 in the morning, but it was further away. But I'm going to be keeping my eye out for this. Again, I missed on this one. When you go to the next weeks on UNH, they're a little bit more expensive. But again, some of you guys are noticing the importance of even getting a little bit of time. But those are my two potential plays. I'm going to be watching those in the morning, as well as now HD. I want to see, they're going to have earnings in the morning. Depending on how they do, they could have an interesting report. You guys saw, I didn't even know these degenerates got it. They played the puts. I was going to play it, but I wasn't down with it. I want to see. I'd rather wait for the continuation. They don't usually move, but watch the value stocks and how they play out. Home Depot is going to be good. Nvidia is the next one. We brought this up there, and you guys even saw that Iron Condor we have. Even though it's up, we're perfectly in the range. That was one of the better gainers today. We could still make $1,000 on that, but we're up $200 total. That's from last week, but this was earnings. They shot up a lot today. This was a good player even on the calls, but watching both sides, I want to see if this does continue, and if it does, and if it follows AMD, Nvidia could be good, but I'm going to watch that for the rest of the week. And then lastly is Target. They have earnings this week. A lot of people have asked me about the criteria. They're decent. They're about 75%, but the problem is when you want to go to the next weeks and look at the prices, if you're getting 2 standard deviations, you could get the puts for like 40 or 50, but then you go to the calls. I think I was looking at the weekly. They're a little bit more expensive, but it's a little further out there. It kind of does meet the criteria. It wasn't this morning. Now that I look at it, I remember I was looking at it all day today. I think I was looking at the wrong contracts. Yeah, I think it was the December 6th. I was looking at the December 6th, not the November 29th. The November 29th might work, but the December 6th, I don't like 20 cents for 130. That's really far out there. And as far as what's expecting to move, you do the short straddle here. Again, you would just sell both the at-the-money contracts, and it's saying it's either going to go to 103 or 120.68. That's just under a 10% move on the downside, and then the upside is about 10%. So it's pricing in calls a little bit more expensive, but I'm going to keep my eye out for that. I might do that one, and that one could be a decent play. So again, be there on stream or get your stream alerts. We'll see what happens. But it has my radar, but I'm not too fond of it. How we see what happens with Home Depot would be good, but now be careful of this, because this could either be a play we grab in the morning or we wait depending on the option. So if you're in target options, call them out tomorrow morning. Let me know what prices they open at, and put them, even if you're holding them, are they up or down, and say when you bought them, post them in the watch list. And this will help us figure out what's going to be the best play and approach to take with this. So the key is going to be, how do we play it in the morning? Because, again, you've seen these earnings. Sometimes the IV just shoots up the day before earning, or the day before earning, it gets pummeled all throughout the day and only goes up in the last 10 minutes. So keep that in mind. But we'll be watching Starbucks. And lastly, Facebook. They were beaten down today. They were the leader in terms of stocks coming down today, but then they reversed. Big volume. It was kind of reminiscent of that day they went 3 or 4%. I think they might be doing some buybacks. This was just crazy, but watch them. It looks somewhat important. And then Boeing is on our next tiers of company. They started up. They did good, and they kind of did the reverse of what Facebook did. But watch them in this level. But be careful if they start getting in that cuck zone and they don't start uptrending. But if they're kind of doing this uptrend stair stepper, if they do that and resemble the SPY, Boeing might be making another test at 400 very soon. Then there's AMC. They had a weird news. The DOJ was going to revoke or bring back like a 40-year law. I don't know what it's going to do to them. I think it could be interesting. I'll be watching them in Cinemark, but you could also go long on this one too. Someone said that. I was considering it. It's an 8% dividend yield, but I don't know how I feel about them, but it looks decent. I keep my eyes on it. Then watch Qualcomm. They did good today too. The options are still pretty expensive, and Qualcomm's at a pretty daring point. It's either going to break from here or going to play this game of chicken and hold up its musical chairs and then randomly going to pop up. But I might start wanting to set up a position, and if I do, I'd want to get time. But watch Quality World. That's definitely going to be a favorite of mine. Then UNH, of course. Watch UNH, Sigma, Anthem, all the healthcare companies and what they do from here. And if they keep up this momentum, they can move really big. So I'm going to be watching those in the morning. The key is just price. You could really get caught overpaying on some of those options. Have a lot of IV for a reason, because when they go, they go. But when they don't, they really do nothing and are worthless. So watch out for that. Then FedEx, they are kind of at an interesting spot. We've seen transports diverge here from the market. See what they continue. There was that little New York Times thing. I want to see if that has an impact. But keep an eye out for them. If they start to slip up, that could be interesting. Then Shopify, see, making the uptrend. We talked about this yesterday. If it has 1 or 2 more days, or even as we just saw Roku slipping after hours, maybe Shopify takes the torch back and they do that back and forth like we saw a few months ago. But watch Shopify. I'm definitely keeping my eye out. Then Lululemon. This was called out earlier today on stream. I liked it. The options are expensive. I know they got earnings in a little bit, but when Lulu starts doing good, kind of how it has in some of these retailers, it's going to be good. So this is going to be one of those on how to properly chase, where it's been making moves. The goal is to try to get the option that's going up, but for a cheaper price. So that could be a good frogger. Keep your eye on that. Then banks is the next one. The S&P is broken out from this kind of pattern here. Now the banks are lagging. So again, market's either going to diverge or the banks might pick up. And if there is going to be bullishness, I'd watch XLF. And then, of course, that brings up Young TLT. They've been getting some steam lately, so watch how bonds and all that plays in, and it makes sense kind of how the banks are moving in relation to bonds, so don't forget about that and what we're looking for. Then McDonald's, they had a crazy move today, up, down, big up, and then they came down. People were tripping on it. I want to see the prices. I haven't looked, but again, this is just the premium selling heaven. But whenever, just like Qualcomm, whenever that picks a decision, that's going to be nice. And then lastly, Chipotle, they bounce, so they're doing the opposite. So when you watch what McDonald's did, that could be saying something, but in general too, there could be a play there even with Chipotle. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Post your watch list, drop your thumbs up, be ready. I better see you in the morning. Stay grateful, understand the opportunities. You got to reach out there. It's great to see. Post your play, source the info. Shout out to everybody. It's going to be an interesting week here, just like we've seen, and we have to learn to take advantage of it. Use these tools, use the ghetto spread, protect yourself, find these opportunities to strike, and that's it. And don't force it, baby. Let it come to us. I think when we got another streak, baby, we can roll the dice. But you know who determines the fall, baby. So let's see. We'll let it come to us, and that's it, baby. Let's go!